Welcome back to Trading Hour. Well, Greenlam Industries recently reported their Q3 numbers. The company delivered a weak performance in the quarter gone by. Revenue growth was soft while EBITDA declined. Profit after tax halved on a year-on-year basis. To discuss more on this, we are joined by Saurabh Mittal, MD and CEO at Greenlam Industries, who joins us now. Thank you so much, Mr. Mittal, for joining us now. First up, give us a sense on the outlook as far as FY25 and FY26 revenue targets are concerned. And in this, what will be exposed as a percentage both of sales as well as margins?
So FY25, we were targeting like a 18 to 20% growth earlier. And I think 9 months, we're about close to slightly above 12% growth. So my sense is FY25, we will be in a 12-13% kind of a top line growth, this FY. FY26, we should be, I think, again, back to a 18-20% kind of a growth, and a target for FY26. On domestic to exports, I think the domestic market share will keep going up because several of the new capacities, new products are largely domestic market oriented. I think currently it's about 55% domestic revenue and 45% export revenue. My sense is in the coming year, probably will be 60% domestic and 40% international revenues. While exports will keep growing, but because the two new categories of particle boards and plywood are largely going to be domestic market oriented, the percent shift will happen.
Got that. Saurabh, what according to you are the reasons for the miss versus your expectations? You'll end the year with 12-13% versus your earlier anticipated growth of 18-20%. So what were the headwinds to your mind?
So one is the new plant got delayed from Q3 to Q4, which is the particle board plant. So those revenues got deferred. And I would say the second would be the domestic market offtake has been slower than expected, and even the international growth in Q3 slowed down a bit. So I think just maybe demand situation in both domestic and international markets, and the shift of the production startup of the new plant in Andhra Pradesh, which began on 23rd of Jan. While growth might have slowed down a bit versus our expectation, I would also want to say that we've taken more market share. So we believe we've grown market share in both domestic and the international markets. The new categories of floor and door have started delivering results, and we see a good traction in that segment. The plywood business has also been growing well because we were new in the business, and we've also improved realizations there. So I would say it's a mixed bag. So certain areas we've kind of slipped a bit, mostly demand-led, but versus the market, I think we've taken more market share.
So Saurabh, what's the evidence that you've gained market share? Do we have numbers?
Well, I don't have the numbers off my hand, but if you see records like data of listed companies of H1, so clearly our market share in laminates in both domestic and international has gone up. We do get some data on the international market, but that's a later point of exports from India. So there too we see our growths been higher than the competition, and we've gained market share.
Okay, Mr. Mittal, one thing we want to understand, while you've gone ahead and moderated your FY25 revenue growth guidance, give us a sense of the volumes you're targeting, because the quarter gone by, there's been volume growth and there's been better realization growth. So FY25 and FY26, give us a sense of volumes that you anticipate in the various segments, and also what will be the realizations that you will be able to garner.
So going category-wise will be hard for volume, but I think we have had volume growth in 9 months across categories, I think, other than the veneer segment. And we've said this earlier, volume in laminates in the core category should grow at about 10-12%, every year. And on the realization front, I think in last quarter and 9 months, I think we've had a lot of pricing discipline. Value mix has been pretty decent. So realizations have been well maintained or slightly have improved. Raw material costs have also been by and large stable. Whatever cost increases happened, we had passed on the increases to the market. So I think from those parameters, things are looking pretty good. We just need to push up a little bit of volume sales to improve our growth and our profitability.
When do you expect the decorative veneers segment to grow?
So if you look at that entire category, the veneer, the flooring and door, they have grown in Q3 and 9 months. And the veneer, the decorative veneer business is still running a slight degrowth on a 9-month basis. So I expect the flooring and veneer to grow well in Q4. The veneer business might be like flattish versus FY24. So Q4 and Q4, we expect some growth coming in. But as a category together, all three products, I think will grow in FY25.
Mr. Mittal, talk to us about both capacity expansion plans at Andhra as well as Gujarat. Both of these plants you expect to increase capacity. When do they come on stream? Any delays over there? And what is the peak performance that we can expect from these new capacities when they come on stream?
So as we talk now, all the new capacities we were building have come into commercial production. So we have no capacities pending to be put to production. While we've said in the past that we have brownfield capacity possibilities in both Gujarat and Andhra Pradesh, they remain the same. On these capacities which have been invested on a near full utilization, I think we should be like a 4,000 crore kind of a revenue, over the next 3 FYs, which is up to FY28. So that's what I can say at this moment.
And a quick word on how we should expect margins of the company to trend going forward?
Well, if the revenues come in, the margins should keep improving. You see gross profit, despite all the challenges, have slightly inched up in Q3. We've been able to maintain gross profit in 9 months versus 9 months. So clearly pricing discipline, value mix, RM costs are stable. So I think we just need to ramp up a little bit on volumes, and I think margins should keep improving as revenues and volumes keep moving up.
Thank you so much, Mr. Mittal, for joining us, giving us a sense of how Q3 panned by. Some moderation as far as FY25 revenue growth is concerned, but a more positive outlook as far as FY26 is concerned.